Hi, my name is Fan Yang, your Chief Technical Strategist here at ForexMinute.com. You're watching today's Forex video briefing. It is Friday, July 18, and we're in the middle of the US session. Today, the market was relatively quiet in terms of fundamentals. Some US dollar crosses tested some key levels in the near term, but there does not seem to be any commitment this Friday session. Let's take a look at the euro dollar, pound dollar, and the Aussie US dollar pairs. Euro dollar consolidated in the past couple of trading sessions. Today, price dipped below consolidation lows and tagged the 1.35 handle. The 1-hour chart shows that this week's price action has been bearish and the downside pressure remains on the 1.35 handle down to the 1.3476 low on the year. Now, at this point, a break above the 1.3540 pivot can suggest further consolidation. Otherwise, the euro dollar looks poised to test that 1.3476 low on the year, which you can see in this daily chart. Break below this level opens up the November 2013 lows in the 1.3295, 1.33 area. Although it made a new high on the year at 1.7191, the pound dollar remains in consolidation to end the week. Price is still testing for further bearish correction, but we are seeing some support around the 1.7060 support resistance pivot. If traders cannot push the price above 1.7125, the bearish correction scenario is still in play. The 1.70 support resistance pivot, let me put that in there. So you see 1.70 to 1.7010, we have a support resistance pivot area, and that would be where we can expect some buyers on this dip. The last line of defense before the pair turns away from the bullish outlook is around 1.69 to 1.6920. Looking at the daily chart, you can see that if price gets down there, it would be testing a rising trend line from the November 2000 low of 1.5854. A break below that trend line and below 1.69 would open up the 1.67 pivot here that we saw from the start of the June rally. The Aussie US dollar pair looks like it is completing around the top pattern in this 4-hour chart. There are bearish signs in July, but at this point the bearish bias established in July would be shelved if price can push above 0.94. Today we saw traders try to push above 0.94 but found resistance, so the downside risk remains toward the 0.9320 to 0.9340 support area. A break below 0.9320 opens up the 0.92, 0.9210 support area. Let me go to the daily chart. So 92 to 9210 would be the next support area below 9320. As you can see in this daily chart. If price, however, pushes above 0.94, going back to the 4-hour chart, okay, it will first focus on this 0.9440 area, the resistance, and above 0.9440, then the market looks like it's at least neutral to bullish, with the focus on the 0.9504 high. With upside, with the focus on that high and a bullish continuation instead of the focus on 0.9320 with a bearish correction outlook. And that wraps it up for today's Forex video briefing. Once again, I'm Fan Yang, your Chief Technical Strategist here at ForexMinute.com, wishing you a great weekend.